Good morning, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 9:19 a.m. on a wet and windy and somewhat cool uh, Sunday morning here out in the New Jersey, New York waterfront. This is a introductory free uh, new member advanced coaching session or training session that I do for new members when they join our service. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we shall begin. A couple of important points here. Keep in mind that these free sessions, free webinars, anything that I do which are not the paid training sessions are available to all members and anyone who has anyone out there who has internet access on the Clueless A Trading YouTube channel. And highly recommended that you'll check that out time to time. Of course, you get notifications when the YouTube postings are put out there. And if some of the people who listen to this, uh, bear with me 1 second, sorry about that. Some of the people who are seeing or visiting Clueless 8 for the first time, keep in mind that this is our YouTube channel. We have multiple very powerful, very strategic, very simple to understand explanations, more importantly, forecasts on the market. These are all actionable videos. These are the ones that people use as roadmaps in order to navigate these extremely volatile markets and make money, or at least limit their losses, and then turn around and make make that back up. And all these are available in YouTube channel, going all the way back. So if anytime anyone wants to see my forecast record or my overall strategic direction of what I said, all they have to do is simply roll back and pick a date and listen to it. These are done two or three times a week. Instead of writing long blogs, we go out there and I put out these visual webinars, and I think these are extremely helpful to everybody. So just keep that in mind. So you can always click on a data and say, okay, what did Frank Clueless A Trading talk about, when we had that 500-point drop in the market? Well, you can just click, listen, and you go from there. We also have, and this is very important for all new members, and I know most of you know it, but just as a very powerful reminder, we have a playlist. That playlist includes something called New Member Introductory Video, and it should be right there. New member introductory video. There are 38 videos in there. You don't need to listen to all 38 videos. If you want to quickly fast forward and do some fast scanning and look at the ones from way back earlier, that's fine. What's very important in this new member introductory video is that what's really important in this category, and it's extremely important, is there are some very powerful videos that I did with actual webinars and explanations that I did on chart pattern analysis, understanding my charts, on Quad, which is the algorithmic high frequency trading charting platform that I use. That's my term, Algo HFT. I also have very detailed explanations on certain aspects of the market, how to read candlesticks, and these are all in the new member introductory video. So it's extremely important that you guys visit that, pick and choose the titles, listen to the more recent ones, listen to the older ones about chart pattern analysis and stuff, because without that stuff, you're going to be lost. And this is a very, very useful, resourceful playlist, as you know, Milan, on my service. So, saying all that, let us talk about some. Let me move this out of the picture. There you go. What we're going to attempt to do today, as we always do, is we are going to basically talk about some basic stuff. I'm going to leave the floor open for the next half an hour, 45 minutes on finding out what you're looking to understand, and then we'll go from there. Very important, reminder that all members are entitled to 2 advanced free coaching sessions. All right, where I'm going to basically give you the basics and a little bit more advanced stuff on how to read my charts and things like that. After that, if they want to take their trading to a next level, which many people have, you have to sign up for the advanced group sessions that are available for sign up at a very nominal price. I believe it comes to about $50 a session or $45. That is dirt cheap, and because I'm not looking to get rich off spending hours and hours explaining to people and members on what they are on trading. My job is to basically put out very precision alerts and charts, and but those things will take you to the next level. In my opinion, are extremely valuable. So just keep that in mind. So saying all that, let us now review, and I'm going to bring in the folder. Let us review directly, go into looking at recent charts, and I'm going to just very critically walk people into how they need to read those, then how they need to apply them on their side, and then of course how you manage your own trades, which are part of one of the items on the advanced coaching sessions, is the difficult part. The management of a trade, once you are in it, how you need to dollar cost average, how you need not to panic when markets get super volatile, and markets are super volatile. We know that. There's something we can't run away from. I don't control that. Nobody controls that. And so that stuff really comes over time and skill. And just like any other profession, you tend to get better and better at it. So does that make sense to you, Milan, what I just said?
Perfect.
Okay, good. Let me just put this up here. This is the daily chart. Bear with me. While I'm putting these things up very quickly, let me just remind people of one very simple thing here. Technical analysis, just on a standalone basis, just like anything else, is not the answer to every single trade or every single move. Technical analysis is extremely helpful, extremely critical, in my opinion, because the markets are completely driven by machines. And when markets are completely driven by machines, technical analysis and the charts that we draw give us an idea where we need to exit an entry, and at least we know where we can fall to when things get really rough, or we can rise to when things are moving at moving very fast, very quickly, which happen equally both on the upside and downside. Obviously, the movement up happens a lot more. That's the reason why the markets are where they are right now. Overall primary trend is still higher. So extremely important to understand, and which a lot of new members don't quite understand, is that there is no perfect method. I'm showing you some very strategic tools on the trading and investing side, both swing and day trading, and you need to basically you need to apply those tools. At least understand some of the charts that I'm putting across. So saying all that, I want to explain one thing very quickly before I get into the charts, and that has to do with let me just erase this. That has to do with basic trading, the pillars of trading and making money. There are primarily two types of trading, which you guys all know. Okay? First one is the swing trading, which simply means that you are going to hold something greater than 1 day as long as 5 days. And in these type of volatile markets, where the way things are, I would say that on a swing trade basis, it does not go longer than in one stretch. Keep that in mind. In one go, not longer than I would say 5 to 7 trading days. Do you understand what I just said?
Yep, very good.
Okay. Now, why is that important? in very simple terms. You can certainly hold something for weeks. There's no problem with that. But what I'm talking about is when a big move in the market is happening, they generally work in 3 to 5 day time frames, 3 to 5 day moves. That's just the cycles of the market. So if you get a big move within the first 3 to 5 days, as you know, with these, especially these type of very fast moving stocks, then you want to be taking profits, rolling those options out to higher strikes and moving along. So very important, they last anywhere from 1 day in greater than 1 day to roughly 5 to 7 days. That's the swing trading part. And then you take your profits, you keep your core position, you move along. But I'm talking about making that fast money, because if the stock hasn't moved between this period of a maximum of 7 trading days, then obviously something is not going right. The charts are not cooperating, and you need to evaluate your position in that particular stock depending on the chart formations that I'm showing. Am I clear on that?
Okay.
Okay. The second part is day trading, which most people know that term is very widely used. Day trading. Okay. Now, day trading simply means that you are holding the stock for 1 day, that option. You're closing out by 4 p.m. Day trading entails great rewards and subsequent risk. Day trading is fantastic for people who are chart traders. They're moving on the charts. It's great for people who are basically at uh, I'm sorry, at the desk, trading desk, the whole day or thereabouts. You don't need to be there the whole day. So let me talk about let me go back and say, so we talked about the swing trades, which can last anywhere greater than 1 day, but somewhere around 7 trading days, between greater than 1 day and around 7 trading days. So that's your days. That's your swing trading. You tend to follow the swing trade charts, even though there are vacillations and movements intraday. You follow the general trend higher. That's your swing trade, despite the fact there's going to be volatility intraday. On the day trading side, you are watching the shorter term charts. Here you're watching the 1 hour, the 4 hour, and the daily charts. On the day trade part, you're watching the 5 minute, 15 minute, 30 minute, and 1 hour charts. That's what you're following. You are not following the primary trend necessarily, like the swing trade. What you're following is the intraday movements that are shown up on the 5 minute, 15 minute, 30 minute, 1 hour charts, and you're basically playing the movements intraday. You tend to make some very decent money on some very fast moving stocks on an intraday basis. I've shown many of them, but you have to uh, spend time watching the screens. So I think I'm pretty clear on that, Milan. Any questions on this part?
Yeah, great, very clear.
Okay, good. Now, the second aspect, which is very important, is the types of, so that's the types of trading, types of stocks, i.e. characteristics, sectors, momentum, and basically those are the main ones. So what do I mean by that? One category of what we call high beta, high speed, high profit and loss type of trades. Let's name it. Netflix, Tesla, Google, Booking, which is Priceline, which was a huge winner, and trying to I think Nvidia. I don't have my screen open on the side, but generally names like that. Very fast-moving stocks. I'm trying to think of. There are quite a few. Alibaba, mostly techs and some biotechs. So these are the high beta, high speed momentum stocks. So when you are getting into and you're trading these things here, you have to be prepared for intense volatility within a primary trend. You can stick to your day trades, make some really decent money, or you can stick to your swing trades depending on the primary trend of that particular stock. The problem is, which we're going to talk about in the third section, is the volatility changes the intraday and short-term picture so quickly that sometimes for many of you it is very difficult to maintain a mental and physical position because of the volatility. You understand that part, Milan, right?
Yeah, that's critical.
Absolutely. And over practice, it becomes a little bit more less stressful, but it's always there. So I'm first one to say it. So that's the first type of stocks. You have the characteristics of a fast-moving, news-driven, powerful, high momentum, the beta stocks. The next one, so we're talking about types of stocks. So we covered the high beta. Beta simply means, you can look it up in Investopedia if you really read it. It's basically the correlation of risk with the market. So a beta above 1, that means it's riskier than the market. Okay? And what happened here? One second, please. Okay, good. So basically, when we're talking about the types of stocks, so the high beta, high speed, which simply means momentum. Beta is risk versus the market. So a beta of more than 1 simply means riskier than your overall market, as in the way the stock trades. Obviously, those are the best ones for options trading. Riskier than market, best for options traders, because the stock moving flat to slightly higher doesn't really pay the bills, correct?
Very true.
Exactly. You want flat, slow moving things? Sure, you can make 20, 30% on it. But who's here in the business, at least my service is not, to make 20, 30, 20% on an option holding it for 5 days? I mean, that's just not worth the risk with that we are taking. The second one is a better choice of words are low beta. These are mostly swing trades. And I would say things like, and nowadays things have changed quite a bit, but still, things like Walmart, things like John Deere, which is quite volatile now because of the trading, but generally speaking, things like Boeing, where you get a swing for 1 to 3 days, even though also quite volatile, thanks to all the trade tariffs and everything going on. Um, things like, let me just open up my other screen so I have access to all these names. So these are not necessarily low beta, but they are more they are in the middle. So this is completely high risk. This would be sort of mid to high risk, and these are trades that can be held for. Of course, you have to watch the charts and stuff, but generally speaking, under normal circumstances, not as volatile as we're going through right now, with the trade tariffs and stuff, you can hold them for a week, 10 days. You can just stick with them. Um, then we have retail stocks like Target, Home Depot. These are all great trades. Lowe's, Lululemon, Ulta Beauty, things like that. These are not low beta. These are all, I would say, medium beta stocks, and these are the ones that we also trade these quite often. So saying all that, let me explain to you sectors. We have the first, we play techs, the names that I just mentioned to you. I'm not going to write all of them down, like FANG stocks. Okay, giving you, we do AMD, MU, all that stuff. We play biotechs, which are generally swing trades. Overall swing. We play Regeneron. We will play stocks like Blue, Sarepta, just giving you examples. ALNY, this. We will, there are lots of categories, but just giving you the broader ones. Then we will play small caps, names, which are doing fine. TRXC. We will pick all these names which are coming up from the side. By the way, the tech side goes a long way. We're in a strong position, very strong position, big winner, holding it. Avago. So there are quite a names in that picture. So on the small cap side, TRXC, which we are sitting on months ago, big winner, DRNA, the biotech stock. Then extreme small cap, which is not something I do normally, which delivered, I think, like 600%. That BLSP, that was a member recommendation. I looked at it, I said, let's go with it. And that thing went from zero, I mean, this how many zeros there? From 17 to, I think, literally went to 0.06. So you're talking about, no, it went higher than that. What am I talking about? Basically, you're looking, you are, it's not even 0.01. I think it was 00. Something like that. I can't even remember. And those things are fine. I mean, you want to play some of these little things, put a couple of $100 in or less, and you are making yourself a good solid 600 to 1,000%. We just did that recently. So we do the techs, we do the biotechs, we do small caps, we do special situations. special, okay, where I'm citing and on my scans are showing up particular stocks, which we will basically breakouts intraday, like a big move on a particular stock. You got to get in them, and they just move like a nut. So we do special situations on that type of stuff, and we have done a bunch of special situations where we have bought these breakouts. Now, the other sector that has come into play, and time to time, sectors that get hot. What's a hot sector, Milan, right now? The pot sector, and has been hot, but great trading things. So on those, we have CGC, we have Tillery, which have done very well for us. I have a few calls left on them, as I recommended for the 90s. We will. So those are the ones which which are the name brands. I like this one the most, and so we will play some hot sectors that are coming into play. We have in past years we have played the blockchain extremely powerfully. Many a whole bunch of stocks. Blockchain, which is basically Bitcoin trades. We did extremely well on Kodak, on Riot. I even forget the names. OSTK, and other names that play. So these are the hot sectors that we basically take advantage of because that's where the fast money is going. On these ones, it's you need to not, in my opinion, one doesn't need to put too much money in, but they need to, as they explode higher, they can be up 20 to 100% plus within 24 to 48 hours, sometimes intraday. So just keep that in mind. So we're clear on this stuff?
Yep, makes sense.
Okay, so I'm basically explaining to all my new members the type of things that we're doing. Not everyone has the same characteristics. Everything is different, just the way life is. And you have to, as you do this more, you get a feel on what you get a feel on, how to manage these things. And I'm showing you the tools how to do it. And then after that, you do what you need to do. Types of movements, types of stock movements. I'm making it simple that we trade. Primary trends, which are primarily swing, like the market. Certain stocks, they'll do this. So that's more of the intermediate to longer term, moving that. Big money makers, breakouts. Now, there are fantastic videos on Google, YouTube that will explain all this stuff to you a lot better, because my service is really not designed, even though I attempt to do it as much as I can, is really not designed to teach people the ABCDs and the 1, 2, 3, 4s numerical kindergarten numbers of trading. So I'm just basically giving you a slight overview, but if you really want to learn the real mechanics of trading, like the basic stuff, there are phenomenal videos on YouTube with 1 million hits, and you certainly want to, listen to those. So I'm just trying to explain that very clearly. So the breakouts, bang, goes, new all-time highs. Range breakouts, stocks trading in a range, then just finally breaks out. Range breakouts. And Milan, you've seen quite a few of them just in the last, week, a couple of weeks that you've been with us. So range breakouts, new all-time highs, are primarily, and then of course the pattern breakouts, the dragon bullish, like the W formation. That's the same as a range breakout, basically. Things like that, so we'll play the new all-time high breakouts. It's going. And these are the ones very hard for a lot of newer members, because they're like, oh, the stock's too high. It just hit a new high and I'm not going to get in. Well, stocks making a new high will make another new high, just the way it is, because a lot of new money flows in. The shorts who are in it get blasted out. That's just the way it works. And these are all part of momentum trading, these breakouts, um, the breakouts and stuff like that. You can do the same thing on breakdowns on a short. So breakouts include the new momentum, range breakouts, pattern breakouts. Let me just go to another screen. We're talking about breakouts here. Okay, so we have the new all-time high breakouts. We have the W formation breakout, which are basically the range breakouts. We have pattern breakouts, actual technical pattern breakouts, right? That can be an ascending triangle, stocks going like this, and boom. And I'm showing you all the internals that at a high probability that can happen, and it happens, right? We play probabilities. We don't know for certain at any time. Then we have impulse breakouts, which are basically news driven, primarily on the small stocks, right? Small stocks, moving, and then it just starts to move because of some FDA approval or buyout chatter, things like that. So those, we trade them too. You have to because you make money on them. Then we have we play buyout talk. Remember, every buyout starts with a rumor. All right. So the rumors start, and if my charts are cooperating, I give it a tick, and I will recommend it. You can take a small position in it and go with it. So buyout talk. Then we have what's happening now on the breakout side. Trade talk type of trade talk breakouts. Good example would be Deere. I love John Deere. Good example would be Caterpillar. Good example in some cases, even these are big cap stocks. Boeing. So you can get these intraday breakouts real fast, and you can definitely jump on them. You have biotechs generally move on buyouts and FDA approvals, right? So you can play those breakouts too. So those in very basic terms is different types of things to do, and believe me, my mind is like a Wikipedia when it comes to the markets. I'm deep inside the markets at any given time. Now, what was one of the breakouts that I did not that I failed to mention? Earnings. We play earnings very well. So let's talk about earnings. How to play earnings. It's actually really simple, to be honest with you. Okay, what we call ER trades, Milan. So the ER trades, the way I do it is I'll give you my methodology, how when I'm working in the background before I put these ER trades out there. I scan the earnings list. I'm just going to say ER. Earnings list 1 to 3 days prior or more, depending on the company. Let's say 1 to 5 days. That's 5 trading days prior to report. I suggest 1 to 3 days before the report to take a position. Generally, earnings trades are reported. I do it like pretty much the afternoon before or that afternoon, and my selection process, just everyone understands how I pick these earnings thing. Number one, past experience on the ones that I play earnings every earnings season. So some of them we repeatedly play it, and there have been repeat winners. Past experience. Number two, this is my selection process. I know the company. Number three, the market mood on that sector. For example, retail. Retail stocks have been hot. So I look at the ones that I feel that they have the best ones to go, and they go. And we have had huge winners. We have huge winners. The most recent one that we just nailed on between Thursday and Friday, 5 below. I've never been to their stores. I don't care. What do they sell? Teenage clothes? I don't know. Or the clothes, they sell warm weather clothes, in the middle of summer. I don't care. The chart looked fine. Like the company, huge winner. Options basically on general went from 2 to 10. That was a 400% winner overnight. You can buy a little bit. So my selection process is past experience on those particular trades, on those particular companies. I know the company a bit. I understand the fundamental, the market mood. And finally, I check out the charts. If something is way down and looking like it's about to make a range breakout, I give it a plus. If something is moving like this and the chart is here before earnings and it's looking like it's got a beautiful primary trend, I give it a check. If something's in the middle like that and falling, I say no. And I've been wrong. Some of these ones, the few of them have gone through the roof. But generally, I look at the primary trend. If they're making new highs, they'll make new highs. That directly ties in with the mood of the market. Market's mood is overall good. Trade tariff or no trade tariff talk and all the stuff going on. If it's a I look at the patterns. If it's a falling wedge and it's starting to break out, I look at the volume. I look at different things. And people who want to understand this stuff, please sign up for the advanced coaching sessions. I'll teach these very, very, very much in detail. That's going to be hugely helpful to you making money in markets, in any type of market. So I'll say yes. Now, once earnings are, what was the other thing that I was thinking of? How to the ER trades. So how to play it? We call it the basket approach, which is very simple. It's a diversified the basket strategy, and it works. There are many different strategies you can do. You can do a basket strategy. You can do a straddle. If you're just betting on one big one, for example, so you want to buy the calls and puts and do the spread, right? You can do a straddle. You can do all kinds of different things. I mean, but the straddle in my thing is works the best. Or you can basically do a call spread, put spread, all kinds of stuff. Okay. The basket strategy is the simplest and the most effective, guys. I've shown it repeatedly. That's what. Let's say there are 5 earnings. Let's say there are 5 ER trades for that night. So you buy, and let me use the simplest example. You buy one call in the money or slightly out of the money. No, not too. If you buy way out of the money and the stock doesn't get close to it, they'll basically report it down to 0. So you're done. So one call, preferably buy time on those options 1 week out, So you have time to react, and you will inevitably get a very overall a net thing. Now, sometimes all four will be down. That's very few times that I've seen it. Okay? It's been there. And out of the five, two of them will go zoom to the moon, and then one of them will basically do nothing. One of them will go to zero, and one of them will basically move sideways and the next day move higher. Let's talk about earnings things a little bit more. ER strategies. What do I look at in my selection process? I forgot to mention. IV, implied volatility. Okay, plus minus 15. What does that mean? Milan, do you understand what that means? Hi, Triple M. Please answer that. So because I'm going to explain this. It's very important to make a lot of money on earnings.
Good morning, Frank.
Yes, good morning. Please continue with listening and you can catch up on the first part. Milan, what does IV mean? Implied volatility.
It's the likelihood of a significant change in the price of the
That's
stock.
right. That's right. Exactly. So when I'm looking at a particular stock on earnings, I get very excited on a plus minus 15 volatility. In simple English, simply means you make a ton of dollars if ER beats. And we have shown a lot of them. Most recently, Five Below. We showed that on Alta. We showed that on Avago. Two of the biggest winners on Friday. Avago, Alta. We missed Palo Alto Network, and the other one was Okta. I don't know why I missed them. So these ones all, sorry, Avago and Five. These were the most recent ones that we played. So they're very high IVs. So it means that you buy one call at roughly $2 to $4, $200 to $400 outlay, and you basically took out between $1,000 to $1,500 on a $200 to $400 outlay. Okay, so IV, when they're big, and they're generally big on bigger, larger stocks, meaning larger price stocks, are extremely powerful tools on when I'm picking my earning stuff. So I'm doing my selection. You can of course have your own opinions on which ones you want to play for earnings, but these basically pay the bills in a big way. I don't go nuts on them. I will buy a few calls. In some cases, if it's very expensive, I'll buy one call. But I buy it within the basket approach. Don't forget that. So if I blow up on that, my money is not lost because something else is moving big time. This week we did Cloudera. Went nuts. We did Zscaler. That first fell and then went nuts on the reversal. That's another thing that I forgot to mention. Types of trades that we do. Just so you all understand. Nothing is a mystery. We big money, we do big dollar reversal trades. Multiple in volatile markets, big dollar reversal trades, which retail traders run away from because something's just falling. Like, oh my God, we generally tend to be buying here, and you see the reversal big time. It happened with most recently this, and you have to go through my Twitter feed on Zscaler. I was telling people to buy it after earnings. CVGW, which is the biggest avocado grower in the United States. Stock was down pre-market about $3. By the end of the day, it was up 3. The next day, it was up another 3. The calls went from, I'm looking at my other screen, the calls went from 60 cents on the reversal I told people to buy, and please check it on your side. On Friday, these were the 105 calls, and this is not the first time. We've done a lot of these. 105 calls went to 330. That means you made 400% plus in profits. You could have easily bought 5 calls, let's say around 60 cents. That's $300. Let's say you sold it close, you didn't get 330, but you sold it at 3. That's $1,500 overnight on one trade. So we do reversal trades a lot. I trade reversals based on charts, not what I think. Very, very, very important. It's not on earnings, it's on different types of reversals that I see. Now, reversals happen in this market because the machines control after hours on earnings. After hours earnings, you see big plunges, very thin volume, especially on some of these names which are not trading very heavy. Everyone panics. Market opens up. Let's say here, they open it up here. All the retail emotional traders, they sell here. They're not watching the charts. I'm showing it. I will put out a small position right there. I see the candles developing. They move it around. Then a big candle comes. Let's say the first part of the afternoon. Then another big comes. Then comes the range breakout. Big money trades, guys. Okay? And I've shown, so you can get it. You don't necessarily need to always get in here. You can pay a small position here. But on the first big candle move, you need to be in. And you can take profits. You don't have to wait for the next day's move further higher. So machines are always faking us out, constantly fakes me out. It's just the nature of the business. They know exactly how people are going to panic. So that's basically, in a quick nutshell, the types of things that we do. Remember, there are many ways to skin a cat, not just one way. You want to play the slow trades on the John Deere type of companies, you're more than welcome to do that. And so that, that's just, each preference. I'm not managing anyone's book, right? You have to pay me $1 million a year, just joking, to manage money. I did that for many, many years. I don't do that. It's over. Okay. So the thing is very simple. I'm going to just pick a chart. Let's say, for example, Avago. All right. So this is a core position for me. I know the company very well. This is Broadcom, big chip suppliers to Apple, to many other great companies. Some of you don't know. I have traded Avago since 1998. Used to be Broadcom. Big money trades. All right. Hawk Tan is the gentleman's name. I love his name. Kramer loves him. Who cares what Kramer likes or not likes? So when you look at a chart like this, and I don't want to spend too much time, it's 10:07, we'll go a little bit longer, obviously, I get excited. Okay? Why do I get excited? Because the stock is down 23%. Oops. It's down 20-some percent for the year. This is a major chip company. Remember Avago was supposed to buy Qualcomm and all kinds of antitrust things. China didn't approve, all kinds of stuff. So it doesn't matter. The stock is down, way down. So that's number one, is a plus for me. This is a leading company. So compared to the Nvidias which are close, which have gone through new highs and out there, this is well above that stock. It was a $285 stock back in November of last year. Their business is flourishing, yet the stock is depressed. That to me is a very large, this is supposed to be a plus sign, opportunity. I'm going to put op. Because I know exactly the ranges are. I know if everything goes to hell in a handbasket, the stock will hit the 200 level again. So this was the chart that, for example, I showed it here. That's the arrow. We bought it here. Pre-earnings, the stock went from 212, bang, just shot up. And then 212, and then shot up to 229. And then went as high as during the day went to 235, which happens to be right at the second channel. That's how you read my charts, right there. It basically went, it climbed up and it went here. Then it went like this, boom. This is a gap. It's going to fill the gap. The gap is 243. Now the market is very volatile. President Trump is hammering the trade tariff talk. We saw Apple just suddenly collapse. Well, collapse meaning went down a couple of bucks based on the fact that a lot of Apple products will be subject to the tariff that he's looking to impose. Then over the weekend, he says Apple should move everything here, make in America. Apple does make a lot of stuff in America. I don't want to get into my opinions, but I think attacking U.S. business like that is just a complete no-no in my book. But hey, he's the president. He can do what the heck he wants. I think it's completely wrong. American business hates it. Business leaders hate it. A lot of politicians hate it too when you attack American business like that through a tweet, through a comment. But hey, we live in a different world now. President Trump has done a tremendous job to help U.S. business, but this trade tariff stuff, he's going overboard. So it's a different day's topic. So bottom line is that this type of chart is very exciting to me. It's one without that it's going to climb up to 243. These calls already, Avago calls that were bought the day before. Avago calls I bought them in the money, the 220s. Okay, paid $4. This is all on my tweet. $4. They went to 15. Just like I said on my previous training on the blackboard. So $4,000. I think that's too much to put into one trade right before earnings, but there are bigger players in our membership group who do that. They took out 15,000, or right at the open, if you sold it, they took out $11,000 because that's what they opened at. This is a swing trade. I have the 235 calls in motion, which during the day went up 60%. So let's say, hypothetically speaking, you are a moderate player and you put in $800 in as part of your basket. So that $800, which would be 2 calls, would be 3,000. Remember, you only bought 2 calls. 2 calls. Each call was around approximately, so you paid $8. They're $4 each, which I love. For a powerful company like this, you could afford to buy the calls without having to pay $14 for it, which is crazy, but that's just the way it is. So you could have bought 2 calls, you could have bought 1 call. And so if you bought 2 calls at $800, which the average trader can't afford to do, you basically took out $3,000 right there. You could just leave for the day and say, listen, I just made myself, $2,200 for the day, which is a very decent amount in these type of markets. Imagine if you did just $2,000 a day, that's $10,000 a week. So right there. So bottom line is, got to be in it to win it. So this is an exciting chart. You look at the gap. Upper gap is this. You have these channels drawn. This is my way of, constructing a roadmap. You look at this magenta line, which is the 150 SMA this is the daily chart, so it's a swing chart. 160 SMA, and that is at 237, which is pretty much where the stock went on Friday. It is now above the 50-day moving average, which is the red line, which is very powerful. We're also starting to see the orange line start to go like this. This is extremely powerful. Now, this is a big resistance. We know that at 229, the stock closed at 233. So what does that mean? The stock closed at 233. It closed above the resistance of the previous big sell point. Remember, it rallied like this in July too, but this was a big fat resistance that the market moved out of. So this has to be taken into account, is where a lot of sellers were here. So that's why the stock And this chart that I showed. This was put out at what time was it put out? This was not the end of the day's chart. This was like early when the stock gapped up. Where's the time on this thing? I'll find the time in a second. So this was like early. This is not the close. The close was here. So this is exciting. So I'm going to actually, now that you've seen this chart, let me show you the current chart so I don't have to draw so many markers on it. So give me a second. Bear with me. That's Tesla. Complicated chart, but I think huge money-making potential. That's my opinion based on the charts too. Look at that. While I'm at it, let me just quickly show you guys what I'm looking at. Tesla, they all hate him. They all think Elon Musk is a crackhead, blah, 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 blah. He's just every genius is weird. He's just another one of them. Okay? This is what I'm looking at. This is a very, very powerful W pattern. Can it break lower? Absolutely it can. Can it go to $200? Yes, it can. If I see the breakage happen at the 240 level right here, 220, you can see that. That's why the chart is drawn. Then you can short it for a quick 20 points, which is going to happen like immediately. And then you want to be a big buyer at this level, which is 180 to 200, if it gets there. Otherwise, we can expect a powerful short-term bounce, which will drive the stock towards because Tesla moves in $10, $20 increments, right? So big money-making potential. Here's a high beta, high momentum trade. These ones you can buy calls out $20 or so because you know it's going to either move 20 up and down. It's not going to move $2. This ain't Walmart. Okay. So bottom line is, this is my opinion. I've made some big money. I've lost some money, but net, I've made a lot more on Tesla than I've lost. And I don't like shorting the stock. It's my preference. Some of you can do it and make a lot of money when you drop like this because I just don't know at what point these the stock will turn. And it's got a huge short position. That means you get burnt real fast when you get these type of reversals of $30, $40. That's it. So bottom line is the most I can see the stock get to from where we are right now, which is around 264. Most I can see it getting to is 294. So another 30 points right there. And I'm just say you knew nothing about the company, you just looked at the pattern. This pattern says lower. If it breaks down, deep oversold, that you have to look at the stochastics, and the stock can bounce 20, 30 points real fast on any inkling of any good news. And trust me, the news isn't that bad. You know, they're going to hire the CFO. They're going to get a new chief operating officer. This is a world-class company, and they did some big management changes on Friday afternoon after the market closed. The stock was up about $2 after market. Doesn't really matter. So this is the way I'm playing it. Let's go back to Avago. Did both of you understand a little bit what I just talked about right now? Yes?
Absolutely.
Okay, good. Thanks.
Yes.
Okay, good. Trust me, trading is just like any other profession. You just have to be in it, and you have to understand the mechanics of what goes on. It's a lot more complicated than it was than, let's say, a few years ago because of the mechanics of the trades, right? Because of the way the machines are controlling everything. And that's the reason, and don't feel bad about it, that even the best minds in the business, these big hedge funds, some of my buddies back from my old days, these guys are phenomenally smart. They're losing money right, left, and center. They're losing money. I'm not saying I'm making money every day, but net I'm making a lot of money. Do you guys see that? But this week we made money almost every day. So bottom line is that if the best minds in the business can't handle this market, you guys should feel really, really good about yourself when you're making even some small money in this market with my tools that I'm providing and your own gut feelings. That's the way I look at it. Be proud of that. Because all this smart money is very dumb money right now. I mean, really dumb money. They don't even know how to trade this market. And I don't know what's so difficult. I mean, I know what's difficult is the volatility, but it's not difficult to see the overall rising primary trend on the market that I've shown on my charts hundreds of times throughout the week and month. So let's talk about Broadcom, and then we're going to close this because this is a very powerful trade. Look at that, powerful. All right, that's a lot of short covering. This was a bearish engulfing. It did a complete U-turn. A complete U-turn. You can see that right there. Forget about all these moves here. Actually, this is your picture of Broadcom. Yeah, that's better. So you did a massive bearish engulfing to bullish engulfing. I mean, I don't even know how powerful that pattern is. I think it's fantastic. If there was very little volatility in the market, this stock would on Monday, it would be at 250. That's serious. Gap fill, gap fill. Obviously, there's going to be selling at gap fill. Standard procedure. Currently, their forecasts and stuff were damn good. The stock momentum-wise, what we call the McClellan oscillator, and those I explained very well in advanced coaching sessions, which are, which everyone should sign up for. And this is good. Full stochastics moved up, moving sideways. McClellan oscillator was very oversold here, very oversold. Once the McClellan oscillator starts to turn, and of course it'll turn as the prices drag higher, you're going to see the stock in this zone. And that's when you see this turn. In this zone, I would say, first. McClellan oscillator turns, you get nice moves. McClellan oscillator turns, you get nice moves. Turns, you get shorter term moves. This deep oversold, you get very fat moves. That was back in in January when the market rallied. So at this point, really nothing to explain too much. Internals are positive. Can you get a pullback like this, a quick one, before it resumes its move? Yes. Now, if market conditions change, we get into a complete full-scale technology war with China, then obviously Broadcom is going to be a victim of, just like every other tech stock is going to be a victim. And technically we will come down back to 220, and I will be a buyer. This pattern overall is starting to look like a dragon bullish W pattern, which resolves itself at 250 and a gap. See that gap here? See, when I look at a chart, I just dissect it immediately. And you guys can do that. It's very easy. There's your gap. That's your other gap. That gap is 255. It's a big money maker. You can change small accounts into reasonably nice size accounts very quickly. I like it a lot. The other indicator that I will be showing and will highlight is, if you look carefully here, doesn't take much to look, the 34-day moving average is starting to curl up. The 50-day moving average, it broke above, and this is called the breadth thrust. This is power. This is massive short covering, and new buyers came in and said, okay, Broadcom's good to go. That's why you get this type of, because you cannot escape the gravitational pull of a 50-day moving average moving lower without billions of dollars going into it. That's just the way it goes. It's called the breadth thrust. It's like a rocket propulsion leaving Earth away from the gravitational force of Earth, right? That's why we have booster rockets. So this candle is a booster candle. So I like it a lot. Now, once the 50-day moving average curls higher, that requires a couple more of these green candles. Then this orange line, which is the 34-day moving average, starts to appear. God help us. By the time they say, oh, technically buy the stock a lot, it's going to be up here. And we will sell. And of course, at that point, it'll pull back and move higher, because at that point, the primary trend of Broadcom, which is or even though traders can make a lot of money within these type of downward move, but the primary trend was down. So if the primary trend, it is being confirmed, not fully confirmed yet, is going to be higher, then you will see the stock go back to 270. In the meantime, traders, regardless of what the analysts say or not say, can make money off each of these candles and patterns. Despite the fact that the overall trend on the stock was down, that's something very, very important for all of you to keep in mind. And this is the last thing I'll say. Bear with me 1 second, ladies and gentlemen. And this is something all of you have to remember. Tactical chart traders can profit make dollars in all types of markets. Always remember that. Not possible for retail, that means, individual, emotional, price chasing traders. Not possible. Because you're going to be trading price is going to be going there, it's volatility, you're going to be selling at the wrong time, you're not going to make money. Period. Focus on short, long, and then primarily long trades based on let's say charts. That's it. All right, guys. So have a great weekend. I will be doing my weekend webinar starting around 8:30 p.m. tonight. God bless you all. This is a fascinating business. I don't read from a script. I don't have an exact thing like, oh, I'm going to tell them exactly this because that's it. I show them what has worked for me, what is the reality of the markets, and I'm very happy that you guys are members. We'll go a long way. Have a great weekend, guys. I'll see you guys hopefully tonight. Very important. One last thing. Any quick questions? A quick question from any of you? Milan, you're good to go?
Yeah, nice job. Well done.
Thank you, sir. And very important, if you feel that something is helpful, our part of our marketing process is to member feedback. So please feel free to write a couple of lines on the website under members content, under testimonials. Just a quick thing, just the way you said, you found it very helpful. ACS intro session, all this stuff. It really helps us out with our marketing. Triple M,
Absolutely.
We're going to see you later on tonight, hopefully, at the webinar. Okay?
Okay.
All right. Good night.
Okay.
I mean, good afternoon. Bye. So, yeah.